Well, the stock market has roared higher ever since Donald Trump's surprise victory a little less than 2 weeks ago. Price of gold's gotten slammed. Maybe it should be moving in the other direction. Remember, Trump wants huge tax cuts and substantial infrastructure spending. That agenda should cause two things. The government will need to borrow a lot more money, and the economy will likely accelerate, perhaps dramatically. What do government borrowing and a faster economy have in common? They both lead to inflation. When inflation picks up, people buy gold. And when it comes to the gold business, my favorite miner is Randgold Resources. It's a company with low production costs, a proven ability to find the precious metal in regions where other players fear to operate. They've got 5 mines across 3 African countries that aren't exactly renowned for their stability: Mali, Ivory Coast, and the Democratic Republic of Congo. Randgold reported earlier this month, and while the company missed Wall Street's estimates, they did pretty darn well on the key metrics that really matter in the industry: production growth and cost control. Randgold's production increased by 7% versus the previous quarter, and their average cost per ounce declined by 9% over the same period. All told, they're spending less money to produce more of the shiny stuff. Plus, management made clear the bullish outlook remains on track. That's the long-term outlook. Now, Randgold stock's been a real roller coaster. It's roared higher in the first half of the year, come down from above 125 early July to 74 as of today, in part because gold prices have pulled back, but also because the company had some short-term problems that now seem to be behind them. So can this stock make a comeback? And what should we expect from the price of gold as the Trump administration approaches? Let's check in with Mark Bristow, the CEO of Randgold Resources, to get a better sense of this company's prospects. Mr. Bristow, welcome back to Mad Money.
Hello, Jim. How's it going?
All right, Mark, I got to tell you, rarely have I ever seen a stock diverge from the fundamentals. I mean, you basically stuck by your whole approach of what you're going to make. You've lowered costs for your finding costs. You've actually grown the business. Is it frustrating to you to know that the actual net worth of your company is probably well in excess of what the market capitalization is?
You know, Jim, this is a long-term game, so, it goes up and goes down, but we have no plan to impact negatively our share price, the value, the inherent embedded value of the share price. So, things happen, as you've followed the stock for a while, and the market moves it around, but we're very clear what we're going to do.
I think you're too modest. I mean, the stock went down 40 points while you blew away the numbers, and particularly in the Kabali mine. Can you tell people about how you've been able to get so much more out of that mine than even 3 quarters ago?
We had a tough start for the quarter, and again, as I said to you last time we spoke, we had a plan. We sat down, we knew what we had done wrong, and we set to fix what we had done. And we had a really good quarter 3, and quarter 4 is going to be even better, which is great.
Now, there's a great piece that J.P. Morgan put out because they went positive. They were talking about brownfield optionality underappreciated, a suite of internal projects that can be developed under under the rate of return that you like. That is probably underappreciated. I've not thought about the actual brownfield opportunities. I think about the mines that are currently in business. Tell me about some of the hidden assets you've got.
Jim, I think before I start with that, it's also worth noting that, since we started, based on our original feasibility studies, we've delivered 15 million ounces, and we've replaced all 15 million ounces at the same grade, which is very different to what the market's done in the last 15, 20 years. On our brownfields, we've got this really exciting project in Senegal. It's just about at a point where it passes our investment filters. As you know, we look for 20% internal real rate of return at a long-term gold price of $1,000 and a minimum mineable amounts of gold of 3 million ounces.
How were you able to reduce your total cash cost and at the same time put up the best growth of the miners that I've seen?
We focus on value, and I think that's what keeps us disciplined, is that focus on profitability. You know that we're the only gold miner that's never impaired. We've never cut our capital. We've never cut our exploration budget, and neither have we retrenched our workers because of a lower gold price. Why? Because we plan for the long term.
Now, it looks like there's going to be a bit of maybe a pause in spending, which is going to allow the money to build up, which I know you like to be able to, therefore, in a variable dividend environment, give us more of a return on dividend. Is that in the plan for the first quarter of 2017?
Absolutely. Our plan, and we're on track to end the year with $500 million of net cash, no debt. And we've said once we get there, we'll look every year in arrears at what we need to continue to invest in our own future, keep the $500 million intact, and the rest we'll give to shareholders.
Now, you were very abject about it. The last two times you're on, you admit that you missed your targets. Are all of those issues, which were knotty problems that every miner faces, are they all behind us now?
You know, Jim, we operate in Africa. Every day there's another issue. It's just how effectively we manage it. And we got behind ourselves in the first 2 quarters of this year. But, it's been a 21-year voyage. And on balance, we're way ahead of our game.
All right, now let me ask you, because you have been very good at forecasting gold. Is it not rather remarkable that we have elected a president that frankly wants to spend more and cut taxes, which is historically inflationary no matter what? Why isn't gold going higher? Why is gold going down?
The world is quite confused at the moment. You're talking about our stock price that went up to £100. That was because of the Brexit and the panic around it. And again, no one expected the outcome of the American elections. And that has created a lot of confusion, and the market's trying to find its way. And on top of that, there's still this overhang on interest rate rise, from the Fed. And so there's a lot of things impacting gold at the moment. I've always said that gold will be very volatile for the next 2 or 3 quarters, but ultimately the fundamentals are very strong for a rising gold price.
Last question. Is there a price where the cheapest gold is in Randgold stock, and you just go buy the stock instead of mine?
If you look back 21 years, if you had bought Randgold stock, you would be up significantly today. We're by far the best performer in the gold space in the last 15 years, and we're the second performer of the top 10 performers on the FTSE 100. So, I've always tried to build Randgold as a profitable business, number one, and then focused on gold.
Well, you've done a remarkable job. I know that it's tough to watch the stock go up and down when you're hitting the numbers big, but I congratulate you for delivering on your plan, catching up, and then passing it. Mark Bristow, CEO of Randgold Resources. Great to see you, sir.
Thank you, Jim.
Look, when gold goes out of favor, it really doesn't matter what he does. But he totally delivered from the last time he came on, and it's getting better, not worse. I know this stock's been down. But if you want to have exposure to gold and own a miner, there really is only one. It's Randgold. Mad Money's back in for the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.